SEDEMAC Mechatronics is a company which makes motor vehicle parts and generator parts. Now, the company is coming up with an IPO, which is an offer for sale, and the price band is between 1,287 to 1,352 per share. Joining me to talk more on this is Professor Shashikanth Suryanarayanan, who's the MD of SEDEMAC Mechatronics, and Amit Dixit, who's the joint MD of SEDEMAC Mechatronics. Thank you for joining us on NDTV Profit.
Yeah, thank you for having us.
I want to start by asking you that, the issue is fully offer for sale. How should an investor look at this? Because a lot of private equity and early investors are now exiting from the company.
Yeah. So first of all, the private equity investors that are selling, they're not selling all of it. They're actually selling approximately 30% of their holding because of their own liquidity reasons, etc. But more importantly, about the company itself, broadly, the numbers work out like this. For every additional dollar of revenue that we do, we need approximately maybe $0.15 to $0.2 of capex and about $0.2 of working capital. Okay. So for every additional dollar I make for growth, okay, about 0.35 to 0.4 of investment needs to come in. Okay. Where will this come from? Okay. So that leads to the question of our profitability. If our profitability is strong, then this can be fueled just by the internal accruals. Okay. That's the story of the company. Today we are running at about 20% EBITDAs as displayed in the RHP. And that is more than sufficient for us to propel a growth of about 30-40% without needing any money at all. And further, our debt to equity ratio is very favorable. If you want a little bit more money for even additional growth more than 30-40%, debt is available. Over and above that, I mean, if you're growing at more than 100%, etc., we will take equity, but we don't think that we are in a position where we need to take equity for the next 3-4 years. So there is no need for the company to raise capital now, and that's the reason we have not done it. So it's a purely offer for sale.
All right. So your RHP says that there's heavy dependence of revenue from TVS Motor, particularly one company. So how are you seeing this risk of concentration of clients, and how do you plan to increase your client base, and what is actually the client base between India and overseas segments right now and going forward?
So first of all, customer concentration is a risk for any business. Okay, so if you have customer concentration, the reason is actually quite simple. First is that if your customer itself starts doing badly, then you're also pulled down. Second reason, which is I think what worries investors more, is that okay, if the customer is doing well, but your relationship with the customer goes bad, okay, or the customer has other options, then you are at risk. Your numbers are at risk. So these are obvious risks related to customer concentration. But in every situation, it's important to understand the specifics of the situation. So if you ask the question, why is it that TVS has, we have heavy dependence on TVS at this point in time? The main answer is that the key technology that we have built, sensorless commutation as applied to in 2 and 3 wheelers, both ICE and EV, that technology is the first in the world. And we have carried to the market where TVS has been the anchor adopter of the technology. Okay. So when you have an anchor adopter, you will have heavy dependence in the early journey of that technology propagating, and that's the reason why our numbers show that. Okay, and if you looked at a little bit more carefully, like where we were in FY25 versus 9-month FY26 that we have shown in the RHP, you can see a trend, a bit of a dropping trend. That's reflective of other customers coming in. We have also mentioned in the RHP that Bajaj Auto is now a significant customer. Okay, so it's a very natural process that when you first introduce technology, you have anchor customers, and it is a case of mutual dependence. They respect us, we respect them, and it's a case of mutual dependence, and that's the reason why it's seen like that. The other question that you asked about what is our mix across geographies, the main selling that we do outside of India is not in the 2 and 3 wheeler space. It is in the generator space and the e-bike space. E-bike is a close cousin of the 2-wheeler space, but generator is a very different story. So our customers outside of India, okay, are heavily generator manufacturers in the US, or there are tier ones who are operating in the e-bike market in Europe. So that's our mix. In India, it is the 2 and 3 wheeler manufacturer and also all the generator manufacturers. So we have about 10 to 12 significant customers, and like any B2B heavy technology business, you go to the big adopters to say that, hey, this is a new technology, why don't you adopt it? That's been our journey. So we have about 10, 12 big customers, and of course TVS concentration is there. Right.
All right.
Yeah.
So you would say that Indian concentration is more than the overseas right now.
Absolutely, absolutely. About
And going forward, how do you see this?
it will continue to be the case. See, our bread and butter market right now is the 2-3 wheeler market, and that is not going to go away because we have lots of things to do in the 2-3 wheeler market, and we do expect that because of that, in our revenue mix, the 2-3 wheeler OEMs, whether it is Indian or whether it is Japanese or something, they will have a significant portion. Okay, and the other portion will be generators. But generator market is a lot smaller by itself than the 2-3 wheeler market. So even if we have very good presence there, on our overall numbers, the generator contributors will be lesser. But now we are going after, like if we have mentioned in the RSP, other markets, like we are going after power tools, we are going after CVs, etc. So over a period of time, we believe that the big players there will also start occupying. Okay,
All right.
and how much we sell to whom depends on the relative size of the market and all the strengths of our propositions there.
Got it. So as of now, it's India and overseas. Talking about overseas, with US trade deal, tariffs, what sort of risks do you see with the whole, your clients over there? And also, marginal supply is taken care of from China. So if you could talk about the whole geopolitical risk to your business.
Yeah. So the tariff, we do sell parts to the US. We export parts to the US. So the tariff situation is applicable to us. First of all, I think it should be clear that the tariff is not paid by us. It is paid by the importers. That is, our customers pay the tariff to the US government. Okay. So obviously, if you are shipping from here and if you have very large tariffs, until recently before the Supreme Court ruling of the US, it was 50% tariffs for parts coming from India. Then the question really becomes for the buyer is whether whether whoever you're sourcing from is easily replaceable. So let's say you're giving orders for textiles or something like that. You're getting clothes. Becomes a little more easily replaceable because you may be able to go to Bangladesh or Vietnam or wherever, and I don't know, Thailand or something like that. But in our case, we do sell technologically intensive parts, and with heavy co-development with the customers wherever they are, whether India or US, and in this case US, it becomes a situation where both of us have to address it together in some way or the other. But it's not a do or die at all. Okay, so it will have if the tariffs continue to be significant over a period of time, it will have a long-term consequence, but it's not a consequence that is seen in the short term. Okay, and we have ongoing discussions there. On the China side, our dependence on sourcing there is very small. So about 6 to 7%, I think, mentioned in the RHP of our total sourcing. It's not a very significant part of our discussions.
All right. What differentiates the business from other companies from India and also globally?
Yeah. See, I think this may be a little bit of a long answer, but I think it's important to understand this. The automotive industry, which in the mobility industry that we serve, historically, the mobility industry in India has been an industry that has followed the West. Okay, automobiles have first come in the West, and then over a period of time they've come here. And the same is true for the technologies that sit inside the vehicles. Okay. So you would typically have the major technology players having first built those technologies in their home markets, introduced it into vehicles there through some relationships. Let's say the biggest of them is, let's say, Bosch, who's been doing this for a long time, built first in the world technologies. And then those technologies are brought here by an ancillary partner who typically partners with them. JV model is very common. Okay. We are an antithesis to the JV model. Okay. We have built fresh technologies sitting here in India. So our biggest differentiator is our continual ability to keep coming up with fresh technologies that didn't exist. Not just in India, didn't exist in the world. Okay. And if you are able to do that, and not very many people in the automotive world, anywhere in the world, are able to do it. Okay. And doing that in India is indeed special. That is the primary reason we have grown so fast, because you're growing with low degree of competition, because there is no competition initially. And secondly, you also have sustainable margins. You can reinvest into building new stuff. All of that story we've built. So our biggest differentiator is our continual ability to keep coming up with fresh technologies. And I think there is no question in my mind that the most creative brain of the company is sitting right here. It is Amit. He's been the father of pretty much all the major technologies that the company has moved forward with, and some of them have succeeded. So it's really the ability to build fresh technologies. Yeah.
So automotive industry is now going through a transformation, going to EV, alternative energy as well. And your business, most of the revenue comes from ICE driven uh, growth. So how prepared is the business to sort of take on the EV wave which is coming?
Yeah, absolutely. This is a very normal question that lots of investors have asked us. By the way, we have had a 17-year journey with investors. So at every given point in time, we're answering various questions related to risks. So this question, I think, would have been a more significant question, let's say in 2024, because at that point in time, our EV revenue from two-wheelers was pretty much zero, a little bit here and there. Okay. But late in 24-25 financial year, we started supplying EV motor controllers as well. And if you look at our 9-month financials now reported in our RHP, more than 7% of our two-wheeler revenue is coming from EV products. Okay, which sort of exceeds the current penetration of EVs in the vehicles that are sold. About 6-7% is going on, and we are growing very rapidly from essentially 0 or 1%. We have grown to 7% in 1 year. So we have no doubt that given our mainstay products are around motor controllers, even for ICE, there is absolutely no way we will not be relevant in the EV market, and our numbers show that. Okay, so I do think it's a very genuine question coming from investors. Maybe a couple of years ago, the concern would have been more. Last year, those who knew us, their concern goes a little bit lesser, and now the 9 months number, I think the concern is well addressed.
So the company has shown a strong performance over the past quarters as well. Uh, how much of it will be sustainable going forward, and how much is it dependent on the OEM cycles?
Yeah. So one thing you need to keep in mind is that, as shown in our RHP, what FY23 numbers was about 423 CR. FY25 numbers is 658 CR, and this 9-month FY26 of revenue, that itself is 770. Okay, so 9 months 770. I don't think it is too difficult to see what it is going to be in 12 months. Why are we growing like this? Because the industry is not growing at this pace. Okay, if you look at the two-wheeler industry this year, of course, it's had a very good year after a few lull years, but broadly it's growing at a CAGR of about 4-5% maybe to two-wheeler industry. But we are not growing at that pace. We are going much faster. Now, why is that happening? That's because our technologies are penetrating a market where that technology did not exist. So it has to do with the rate of our growth, has to do with the rate of penetration of the technologies as opposed to rate of growth of the OEM or the market itself. So we are not that dependent on the market going down or market going up as much as we are dependent on people are accepting our technologies. So we are in that phase. Once our technologies fully penetrate, then this question of how much does it depend on some OEM or some market going up becomes more relevant. But right now we're at the rapidly growing phase of the company, and we do think that because of our competitive advantage, this story of rapid growth is going to sustain. How much it is going to be, etc., we won't be able to share with you even if we could. But also we also do not know fully. Okay, so yeah, it's a phase of very rapid growth, and we feel it's going to sustain.
Lastly, what's your vision for the next 3 to 5 years? Would you be an India-centric company, or you will have more clients in overseas? What will the mix look like, and overall vision for the investors, and what they should consider, or what they should be watching out for from the company?
See, the company has not been doing anything different from 2008. Okay, at least different people have different reasons for why they start a company. At least from my side, maybe you can ask Amit what he wanted to do. But from my side, the idea was very simple. I'm a controls professor, so if we can build control technologies here in India, built by Indian engineers, Indian teams, and take it to the world, fresh technologies, okay, then I would feel happy about it. Okay, so you feel satisfied that you've contributed. That's pretty much it. And to weave that story, you have to put lots of things together. You have to build a successful company. You have to see that the products are used widespread. Tens of millions of vehicles use our products, etc. So that's very satisfying. There is going to be no different thing that at least I am going to sort of push forward with. Great technologies built by strong engineering teams coming from populated by people from the best institutes of India. So that's the story that I would like to take forward.
Would you like to add something on that, Amit?
Yeah, I mean, pretty much what Professor Shashikanth said. What we have been doing since inception is to try to build new stuff and try to take it to the market. We have had many cases where the stuff that we have built taken to the market has seen widespread adoption. That gives a lot of satisfaction. The fact that you have built something that is used by so many people gives a lot of satisfaction, and that is what we'll attempt to keep doing. And yeah, that's pretty much it.
Thank you for speaking to NDTV Profit.
Yes, thank you for having us. Yeah.